Hello, everyone. We still got some folks joining, so we'll be starting in just a minute. Okay, I think we can get started. Hi, everyone. I'm Phyllis Lee. I'm the CMO here at CUCollaborate. Excited to talk to you today about CDFI opportunity, and we have Jeff Bailey here who will be walking through content for that. Today, we'll be talking through certification, benefits, and strategy. In terms of an agenda, we'll do a quick introduction and background, then get into the benefits and opportunities, requirements for certification, certification strategies, and then we'll have time for Q&A as well. You're welcome to ask questions throughout the webinar. We would ask, given that we have quite a large group attending, that you post those questions in the chat and we'll make sure that we get to them. We have a Q&A section allotted at the back end, as you can see, but of course you're welcome to ask questions as we move along the content as well. For those who are a little bit less familiar, CUCollaborate is a data and analytics CUSO. We work specifically with credit unions, helping to maximize growth, impact, and performance of our products and services today. If you have any questions more specifically about the products and services we offer, you're welcome to reach out. I'll be including a meeting link in the chat, and it will be in these materials that are sent out as well. So you'll have that at your fingertips. We have several areas of expertise. Of course, today we're talking about CDFI, but we talk more specifically, or we talk more broadly with clients about growth strategies, field of membership and charter initiatives, low-income designation certification initiatives, branding and marketing, mergers, and digital acquisition. And I'll hand over to Jeff Bailey. Jeff has over a decade of experience as a CDFI lender and consultant. He leads all of our CDFI engagements with CUCollaborate clients and has raised over $22 million in awards funds for clients from the CDFI fund.
Thanks, Phyllis. Thank you for the opportunity to speak with everyone here and for providing a little bit of my background. So I've been with the company here for about a year after that career track record that Phyllis alluded to. And it's been a wonderful experience over the past year. And I've actually gotten to know some of the folks that I'm seeing here in the attendee room. So I know that folks are joining us from a variety of places along the CDFI journey, and we're going to speak to the benefits, the requirements, and the opportunity of CDFI certification with the group here. So if we could go to this following slide here, Phyllis, I would appreciate it. Yeah, so for those that are earlier in the journey, this background may be a little more helpful than those who are further along, but with the benefits of certification, we see as really enabling credit unions to be able to grow in ways that they wouldn't otherwise be able to. There's really a but-for test with additional capital that, when you request an award from the CDFI fund, it's really to be able to reach further and deeper into your community than you might be able to otherwise with your own resources. We think that over the long run, this can be a great part of your community development strategy. And there are some additional benefits to certification as well that have driven some credit unions to participate in this program, specifically something along the lines of the member business lending cap and an exception to that rule from the NCUA. So we can assist credit unions with every step of the process from a very early stage, understanding a fit for the program, from a strategic perspective of getting your credit union aligned with the requirements, all the way to once you do get certified, assisting with grant writing, and once you start getting a bunch of awards from the CDFI fund, assisting with award compliance as well. So let's talk a little bit about the grant opportunity from the CDFI fund. There are 3 annual awards that we have listed in this table here, and I'll just also say there have been other opportunities that have been available from the CDFI fund. There may be other opportunities in the future. those who were certified during the pandemic saw a lot of fundraising opportunities. Those have, pretty much don't exist anymore. But, the CDFI fund has announced the potential for a future initiative related to affordable housing. That isn't a formal program yet, but they have received some funds to be able to um, provide to CDFI. So those one-off opportunities do come about, but these are really what you can kind of plan on being available year to year. So going from left to right here, we've got the Technical Assistance Award. I'll refer to that as TA, Financial Assistance FA, and Small Dollar Loan Program Award, SDLP. So the TA award is generally going to be for smaller CDFIs or those who are not yet certified. So it's up to 125,000, and it's really a capacity building grant that's available to help your credit union get certified if you're not certified already, or add to the capacity of your credit union to achieve your community development objectives. So for the TA award, you'll see the uses of funds in that third row: staff time, professional services, IT, travel, training. Again, that's really in the capacity building realm, that as opposed to the FA award. So obviously that's a much larger award. Once you're certified, you're able to apply for the FA award. And unlike the TA award, which is pays for staff time, et cetera, the FA award is for your lending capital or your loan loss reserves or your capital reserves. It's a capital injection to assist the growth of financial products and services to underserved communities. So whoops, I see here in the deck, if you all could just imagine that the line item that says annually available only to CDFIs, if that is swapped in the FA column over to the TA column. I think we had a transposing issue here. But the FA award is annually available to all certified CDFIs. The Technical Assistance Award is available to certified CDFIs under $1 million in assets, or those who are not yet certified. And I'll say that the TA award and the FA award are available in the application rounds once annually, and you can apply for one or the other, but not both. In a separate award round is the SDLP award, and that's available for up to $500,000 with each application. 350 is available for loan loss reserves, and 150 is available for technical assistance, which you could essentially think of as being OpEx related to your small dollar loan program. The purpose of this is to get more CDFIs in the small dollar consumer loan space. It's $2,500 or less. There's restrictions on CDFIs in terms of what type of debt collection practices are prohibited in order to receive this award, what kind of repayment terms are required. There's a lot of detail in this program, but it is additional resources if folks are thinking that, hey, this small dollar consumer lending is just really not worth it for us. The loss rates may be too much risk for us to be able to absorb. This is some resources to maybe help you get comfortable with that. So that's available on a separate grant cycle. Hasn't yet been announced. It really could be announced at any moment here this quarter if it were to be on a similar cycle as last year. But we do expect that to be named sometime soon. So this is all very exciting and motivating, but of course there are some requirements to navigate in order to be eligible to request those funds, and that is listed here in the 7 certification requirements. So those who are currently certified will know that the rules have changed around CDFI certification. For those who are new to the space, the fact that there used to be old rules is not really material anymore at this point. The new rules are the rules. And so all of that is to say the 7 test framework here with these 7 requirements remains. And so this should look familiar to folks who are not new to the space. I'll quickly say, I'll just run through these: legal entity, primary mission, financing entity. You have to serve your target markets. That's the 60% lending. We'll get more into that. Development services is your the capacity building programs that you offer to help folks increase their creditworthiness. Accountability to your target market is based on your board representation of the target markets you serve, and then non-governmental entities are only eligible to apply. I'll quickly say legal entity, financing entity, and the non-governmental entity are not barriers for credit unions. Credit unions are essentially presumed to meet those tests. And so really the pieces that we look at when looking at fit for certification are having that primary mission of promoting community development, serving target markets at sufficient rates, having sufficient development services, and then also meeting the accountability requirements. You have to meet each of these in order to become certified. So we're going to get into a little bit more depth with those four, being primary mission, development services, target market, and accountability. This probably deserves its own hour in discussing these requirements. I'm going to go through them somewhat quickly, but we do have time for Q&A. And then, of course, if it would be helpful for anyone to meet with our team to discuss these further and discuss how we could assist, we would love to be able to do so. But for the primary mission requirement, there's essentially three pillars related to this one. That's having a mission that promotes community development. The second bullet mentions the requirement to have a community development strategic plan that has been approved by your board. And then so for those first two bullet points, before I get to the third, I'll say that there's ways to address these if you don't already have them in place that we can assist with. There's, the CDFI fund is looking for very specific pieces here. And so you might have a community development mission that implies community development as far as the CDFI fund's concerned, but it really ought to be explicit. And the same thing with the strategic plan. The CDFI fund is going to be looking for specific references to your CDFI target market, for example. Most folks who are going to be new to the space aren't going to have their CDFI target market defined in the same manner that the CDFI fund would. And therefore, there's going to be a little bit of a misalignment with how it's presented versus how it's received. And so one of the ways in which we approach certification applications is to present your credit union's activities in a way, in language that the CDFI fund will understand and be responsive to. So with that third bullet point with the financing practices, I think this one has gotten a little bit of shine in the industry because this is brand new with the new rules. But the CDFI fund has some bright line questions to determine whether financial products and services are consistent with a community development mission. And if you take a step back and think, okay, we've got a mission statement where we're serving the underserved, but at the same time we're charging triple-digit interest rates. The CDFI fund would consider those two components to be incompatible for certification, and that's one of those bright line questions. Just as an example, there are several. With this one, often we're seeing credit unions generally be a pretty good fit. There's a couple of, most often we'll work with clients and need to maybe dig into something a little bit more but not seeing too many bright line, really not too many at all, bright line questions that have caused any concern for fit with the program. And then recently, the CDFI fund provided some guidance on what types of practices related to NSF and overdraft protection fees and how that aligns with community development purpose. So, we've been working with clients on articulating how their fee structure and their mission are aligned when they're preparing to submit certification applications. Let's go to development services next, please. So this one is folks are operating in this space with their community development offerings, but again, the CDFI fund is looking for something pretty specific with what development services are. So one way that I've articulated this development service requirement is the CDFI fund wants to see that you're moving folks from being a state of unbankable to being bankable, from being uncreditworthy to being creditworthy. And so all of the efforts that you have in the community are important, but something like a scholarship fund that one offers is not working in that unbankable to bankable dynamic. The CDFI fund requires that you have some capacity building program that is related to financial products and services. So we've listed some of the requirements here, but essentially on the left side, that bottom bullet point is the sum of it all. The CDFI fund is looking for formal and structured interventions, not just routine customer service in which folks are available for a conversation, but they want to see that you have some best practices that your staff has in place, that there's a playbook that they can reference in order to provide the type of counseling that folks may need to increase their credit scores, or the examples on the right are sort of tried and true examples of homebuyer counseling, financial counseling, credit counseling. Those sort of things in a formal and structured manner are what the CDFI fund is looking for. Can we go to the next slide, please? Yeah, thank you. So this is the target market requirement, sort of the most infamous of all of the requirements, and is really the first fork in the road for CDFI certification. The previous two slides are things that can kind of be addressed fairly easily. This, the requirement that 60% of your lending is to target markets by both dollar amount and by number is, really based in who you serve, and who you serve is, your geographic footprint, and it's the relationships that you have, and it's a lot harder to fundamentally change those than it is to, change the, that strategic plan narrative that we mentioned, which can be maybe a one-page document that gets put together in an afternoon, for example. So we've got the types of target markets here. Again, you've got that 60% requirement. And there's generally three types of target markets that one could address. There's investment area, which is qualified census tracts. You could think of them as low to moderate income census tracts. So that's going to be geography based. Then the other two target market types here are population based. So the middle bucket, low income targeted population, that is going to be based on a borrower's income rather than where they reside. So think of a transaction, an auto loan, say to Jeff Bailey. If I reside in a lower moderate income census tract, then my loan would be target market qualified to an investment area target market. If I do not reside within a lower moderate income census tract, but I myself am low income, then I would qualify under the low income targeted population target market. So you only need a borrower needs to qualify to one target market. They don't need to qualify to multiple. They only count once, even if they do qualify to multiple target markets. And then this last bucket here, other targeted population, OTP. There's an opportunity to have a target market that's based primarily on race and ethnicity, or there's a OTP, individuals with disability type of target market. Now, we're generally not seeing that to be a strong fit for our credit union clients because folks aren't collecting race and ethnicity data at a high level. That information does need to come from the borrower. The CDFI fund has essentially outlined some ways in which one could verify target market qualification based on race and ethnicity. You can't do proxy data. One can't use geographic information in order to infer race and ethnicity of a transaction. So generally, we're looking at these first two, investment area and LITP, as the most common pathways for certification. And so let's just keep in mind that scenario of a CDFI that has an investment area target market and an LITP target market in order to achieve 60% lending. In that scenario, in the next slide, we'll talk about how it meets, what the implication is from an accountability perspective. So again, thinking about the CDFI fund's bigger picture perspective here, if one is claiming to be a community development entity, they have to have some sort of connection to that community that they're purporting to develop. And so the CDFI fund identifies that formal connection through primarily through the governing board. And so the requirement to meet the accountability, the accountability requirement states that at least one governing board board member is accountable to each proposed target market, and at least 33% of the governing board is accountable to the overall proposed target market. So thinking of that previous scenario, and in which you have an investment area target market and an LITP in order to get to 60%. And let's say you have 7 board members. So the requirement would be 33%. So that you would need to have at least 3. And you would need to have at least 3 who meet the accountability requirements, and then at least 1 governing board member to each investment area and LITP. So you could have 2 to investment area and 1 to LITP, or the other way around. And then the way by which a board member would be considered accountable is different for each type of target market, and we can help you all kind of work through that. I'll pause quickly. Phyllis, how are we doing?
Yeah. Great. We have a question in the chat, and I just wanted to make sure we addressed it because I think it's relevant to what we're discussing right now. And the question is, what is the likelihood that a very large credit union will be able to qualify with the 60% rule?
You know, we're looking into that because we do want to better understand the relationship between asset size and target market qualification. There's nothing on its own that would make a large credit union less competitive with a certification application. To me, the bigger question would be, where are you located and who are you serving? I live just outside of Portland, Oregon, in the Northwest. There are relatively fewer qualified census tracts in the Northwest, in just the region I'm familiar with, compared to states that have lower incomes, essentially. And so if you look at the concentration of qualified tracts in, say, the southeastern United States versus the concentration of qualified tracts in the region where I live, sort of your typical credit union, no matter how large they are, is going to be probably closer to 60% in that geography compared to a less CDFI favorable geography like the Northwest. Phyllis, does that?
And we have a couple of follow-up
Yeah, let's
questions
do it.
that, one question is whether loan participation counts towards the 60%, and then a clarification from the first question that they were talking about 60% lending specifically.
Yeah. The explanation I gave in terms of the asset size and the geographies, I was in reference to lending. So without any more additional information, that's about the best response that we can give just related to asset size. Phyllis, the other question that you asked was, could you remind me, please?
If loan participation counts.
Participations, yeah.
60%.
Yeah.
Mhm.
So the CDFI fund differentiates between purchases and participations and what we would maybe just call in-house lending. So in-house lending, yes, that counts. For participations, I think these terms are used a little bit differently by the CDFI fund than maybe in industry, but participations might be if if a credit union has a 50-50 participation with another lender in a housing project, for example. In that case, it would be the credit union's 50% of the loan amount that would be presented to the CDFI fund as the transaction, rather than the total project amount that would be financed. And then related to loan purchases, yes, they do count. Frankly, the CDFI fund has been a challenge to communicate with on this because they've really provided guidance sort of going in both directions. It's something we're actively working on with them to try to get clarification. But the current guidance states that loan purchases do count toward your target market calculation. So if you're doing your in-house or retail lending, and that has a target market rate of 60%, but you purchase a lot of loans that are not target market qualified, that could dilute your target market level of lending. or inversely, if you purchase loans that are target market qualified, that could increase your target market lending rate. I think the CDFI fund thinks that by including purchases, they're creating a market for those loans and therefore supporting the offering of products and services to target market qualified borrowers. So there's a clear community development purpose in that manner, but that is certainly another pathway to add here. And Phyllis, I'm not checking the Q&A box. I see a little red dot up there, but so please feel free to interrupt and jump in if there are more questions, and we certainly have time at the end for questions too. Okay, so for certification strategies, what is this all based on? So we've got, we mentioned my track record in the industry. I've worked with all types of awards, all types of CDFIs. I'm presuming, CUCollaborate works with credit unions. I'm presuming most of the folks here, if not all of them, are from credit unions. But there's also other types of CDFIs, banks, nonprofits, even venture capital CDFIs. So I've worked across the board with them on a variety of different award programs. On this most recent round, we were very excited to see our clients win 2.7 million in FA awards from the most recent round. That was very competitive. I think the numbers were something along the lines of 1.4 or 1.5 billion was requested in the most recent FA round, and 400 million of those requests were awarded. So really a lot of interest in the program, and we were able to help our clients win at a relatively high rate. We work with clients in the ESIP program. We help them with target market modifications in order to address certification cure notices. We've got a track record working with clients on certification applications, small dollar loan programs, and everything else related to CDFI, including understanding CDFI readiness, grant writing engagements, award compliance, annual certification, CDFI certification application. So I mentioned all of this is to say that we've got some perspective on CDFI opportunity here that we're walking through. We've talked about the potential for obtaining grants. We've talked about the requirements to get in the door. So we do want to talk also about just like how to think about CDFI certification for your credit union. So, at the top, we think there's really a tremendous potential for a return on investment of getting to the point where you can apply for CDFI certification, getting certified, and really being diligent about applying for all of the awards that are available. Those awards are not guaranteed. They are competitive. And so, to use a sports analogy, you want to take in as many pitches as you can and take as many swings as you can. And over the long run, with an intentional pursuit of those awards, with intentional uses of the awards that are compelling to the CDFI fund in award applications, we think that there's a really strong return on investment opportunity for CDFIs. We can go to the next slide, look at how we think about that. So, I'll move through this here, but I'll try to orient us. We forecast there to be, we wanted to understand how can you think about the potential return on investment for CDFI certification, given that the award rates are, I think for FA, it's probably, in the range of 50%, a little bit higher for SDLP. But that's going to be variable. You're not going to win every year. No one does. And yet, there's costs related to this. There's resources that need to be put towards CDFI to obtain certification, maintain certification, apply for all of these awards. And so you essentially have variable awards that will come in the door combined with pretty fixed expenses and costs. And so we wanted to see what are the potential range of outcomes here that are that one might look at or be presented with when considering if this is a worthwhile opportunity. So, I'll just look here just to orient us. So we've got along the top different asset size classes. And there's a grouping here just to kind of make sense of the peer groups. And essentially for CUCollaborate, our costs are driven in part by asset size. And so we see that, the costs will range depending on what one's asset class is. And then to orient you along the left side with the different rates of award success, we have at the top the optimistic scenario, which is winning awards at a rate that's higher than what is essentially the award average. Baseline in that second row is the award average. Conservative, slightly down, very conservative, pretty well down from that baseline. So what we looked at was, every year is going to be pretty variable, but over the long run, what are we looking at here? And we were pleased to find, if you look at that very conservative scenario in which one only wins one FA award over 6 years and one small loan program award over 6 years, which I feel pretty confident that most folks can do that. And keep in mind, that's over 6 years. That means you're essentially looking at 12 applications that you're submitting, only winning 2. And that doesn't even count having applied for TA in our model that you do not win. One would not win, again, in this very conservative scenario. Just winning those 2 awards out of essentially 12, 13 tries has a floor of about 2.0 in terms of return on investment rate for a credit union. And there's some assumptions that are built into here, and we can customize this for clients to help them understand what the forecasts are for return on investment. But we didn't know what these numbers would be, and we were very pleased when we landed on from there. So from a financial perspective, we think that the opportunity cost is real. You've got a lot of options in front of you that you're considering, and CDFI does present an investment of time and resources, but we think that there's a really good outcome here for folks that are invested into that process. So one of the ways in which we think that one could move up from that very conservative scenario up toward an optimistic scenario is really thinking of CDFI as part of your overall community strategies. And we could go to the next slide and just say that, the more that one invests into having a for an FA award, it's a pretty in-depth application. It's an application in which you have to present your track record of community impact, and one in which you present what you would propose to do with CDFI fund funds, and you're being scored relative to what your peers are doing. So those who invest more in their CDFI strategy are likelier to have better outcomes when it comes to the award cycle. So here with that third bullet point, we've got several questions that I think from a strategy perspective are important ones to ask, not only when the grant round opens up, but throughout the year when thinking about how CDFI is a part of your credit union. And I was working on a graphic that I didn't get to put into this presentation, but the metaphor that I like to think of is that CDFI is essentially at the table with your executive team, and you're all sitting around the room figuring out what you want to do, what you don't want to do. And if someone were to say, we can't do that, we don't have the resources to be able to take that on, or that's too risky, that CDFI seat at the table would lean in and say, hey, we can address that. And so that, thinking of that as a tool in your toolkit to kind of mix metaphors there, or, a part of the solution and how you determine what your credit union's direction will be related to community impacts, community development, I think will be, you'll only gain benefit from that when you go to draft your award request. So some questions to think about. What markets could you serve if you had additional resources? if you were to request those award funds, how could you demonstrate that you have a track record in that space? What community partnerships would best demonstrate that you are serving the underserved? How do you know that your development services programming, again, that capacity building piece, is really making a difference? What proof of concept opportunities are ready to scale? How could you leverage a CDFI fund award to increase impact? Does it, again, looking at the uses of awards for an FA application, you can put the funds toward loan loss reserves or capital reserves. And does that help your ratios so that you could obtain additional capital? And then you can deal the CDFI fund with, with your $500,000 reward, we can leverage that, whatever number. And then all of a sudden you're talking about a few million in terms of, dollars being loaned out to the community, and that you're really truly making a big impact with the CDFI funds awards. And then that last bullet point is just, what steps are you taking now to demonstrate to the CDFI fund that you're gaining insights into what products and services are really truly meeting the needs of your community, and letting the CDFI fund know that you're being responsive to their needs. Answering these questions thoughtfully will be would strengthen any FA application, any grant application to the CDFI fund. And some of these are easier to answer than others, but having these in mind year round will certainly benefit your application once that award round opens up. So we have here a quick slide for those in the room who are not yet certified. This is the roadmap that we envision for you all. And then the next slide will be a roadmap for those who are currently certified in thinking about steps forward. So the first step would be to kind of measure yourself against the requirements. And so we have that first step here as the target market lending assessment. And that's understanding, are you a current fit? Are you a potential fit? Or do you have some room before you would be ready to submit an application? Before anybody submits an application, our recommendation is to apply for a TA award from the CDFI fund as an emerging CDFI. And so we spoke about that a little bit at the top, but you're able to apply for an award before you receive certification. The requirement will be in one of the stipulations is that you agree to become certified within 3 years. So if you see CDFI on your roadmap, then the TA award is a good opportunity to get some resources early on to help you enhance your community development programming. Next milestone would be submitting the application, getting approval, and then once you get certified, you can start applying for all of the SDLP and FA applications. Throughout this process, we would be available to assist with seeking to address any target market lending gaps, and also in CDFI strategic planning, walking through those questions that we did earlier, essentially taking steps to position your credit union to have a strong FA application, a strong SDLP application, so that you're, again, not just concentrating that effort during the 2-month application window, but having that be year round in furtherance of being likelier to receive an award. I'm ready for the next slide if you are, Phyllis.
Couple of questions before we move on. One question was, if you apply for a TA grant as an emerging CDFI, is there still an asset size limitation?
No, there's not. And in fact, if for those that would not normally be able to, let me rephrase that. For those who would not be eligible to apply for a TA award once certified, which is, I'm talking to you, larger credit unions, we recommend applying for that TA award first before submitting the certification application, because that goes away once you get certified. So taking the opportunity to apply for that award early on is a strong recommendation of ours.
And then just a couple of additional questions related to the TA awards. One question is, what are typical TA awards, and do you need to repay the TA award if you don't qualify for CDFI in the 3-year period?
So what are the typical award amounts? That's a good question. In the most recent award books, they're all pretty close to 125,000, the maximum. The most recent round hasn't been finalized yet, so I'm referencing the previous round. Do you have to pay it back? Yes. So one of the requirements would be that you would have to obtain certification. Um, you have the potential to seek an extension if that 3-year time horizon doesn't fit with your credit union for some reason. Um, but that is a potential outcome. So it wants, in some ways, it's kind of a nice, gives you a deadline to work from because it has that, external clock that has started. But yeah, if you're hesitant about it, let's talk and we can think about the timeline and all the steps that would be required. But it is a good fit for those that do have it on their roadmap. For those that are certified, the big picture guidance here is, continue to meet the CDFI funds reporting requirements. So, um, you know, your you need to reapply for certification next year under the new rules. In the meantime, you are currently certified and will continue to be certified until you hear from the CDFI fund. That includes needing to submit your ACR next year. And because you'll be reapplying for certification, you also need to submit your transaction level report next year as well, which is a part of the reapplication for certification. I jumped ahead there beyond that first milestone, which is really conducting that target market lending assessment. If you're not sure that you're going to meet the 60% requirement by the end of the year, get with us and let's talk about how we could potentially help. Um, the reapplication next year is going to be based on your most recently completed fiscal year. So for those with the 12/31 fiscal year, you can reapply for certification in calendar Q3 2025, but your lending data that you'll submit is based on 2024. And so if 2024 closes and you're below 60%, it's not really much you can do. But here, if we understand that you're below 60% here with 2 months to go, you potentially have the chance to course correct and get yourself above 60% by the end of the year. And that really, in part, is with solutions that we can help you all work with, including forward flow lending arrangements, loan purchases, target market marketing lists, different resources that can help increase the target market rate of lending for your credit union. So, after submitting ACR and TLR, we don't know when the next SDLP and FA grant rounds will open. So we could look back on this slide and think we're a bit out of order here. But for now, essentially the guidance is, apply in the next grant round that opens while you are still certified. And then, if that's before you reapply for certification, then go ahead and reapply under the new rules during your reapplication window. Again, that's going to be based on your fiscal year end. If you have questions about that, please reach out. The CDFI fund has published different windows in which CDFIs can apply based on their fiscal year end. Finally, once reapplying, you will continue to be certified, and then you will receive notice from the CDFI fund that they will, make a determination on your reapplication. So that's the roadmap for certified entities and for non-certified entities. We have about 15 minutes left here for Q&A. If there are still questions, but like I said, please reach out to us if you have questions about any of this. If you have concerns about anything, we're here to assist. I believe we're going to send that link out here in the chat for folks to be able to connect with us and meet with our CUCollaborate. If you haven't had, CUCollaborate is our oh gosh, I'm not sure I know her title off the top of my head, but she leads our business development team. And a link here would get you connected with her. I think I'm ready for Q&A, Phyllis.
Yeah, right now we don't have any additional questions coming through as folks are thinking about whether there's a question they're still formulating in their minds. I put in the chat, but for anyone who missed it, we will be sending out a link to the recording tomorrow. So if you missed part of the webinar or want to share it with any of your network, of course, please feel free to do so. And we do have a question coming through right now, so I'll circle back to that in a second. We'll also be sending out the slides as well. So I know Jeff covered a lot of information. There was one spot where we were talking about how the slide was transposed. We'll fix that before we send it out. So please don't worry if there are any notes that you felt like you may have missed from today. So a question that came through, we currently are at 68% and we'll be at year end 2024. We'll be merging a small underperforming credit union on January 1st, 2025. Our combined will be 49%. Will we be eligible based on 2024 year end numbers?
So I'm assuming that you're not yet currently certified. I see Fred's chat here. So if you're not currently certified, your lending would be based on your 2024 activity, and that would be reflected only of your credit union today, Fred. The merged CDFI is the merged credit unions transactions will be considered once they've formally become a part of your credit union. And so at that point in time will be January 1st. But again, the lending data that would be reflected when submitting an application would be your most recently completed fiscal year. And so you don't need to backfill the merged credit unions transactions into yours for that historic period because you had no control over those transactions at the time. So I think based on what you provided here, Fred, I think you guys would be in a good position, but please feel free to reach out and we can discuss that further.
I think that might be it for questions for now. We know that CDFI is a complex topic, and of course, each credit union will have its own unique considerations and implications. I think Jeff probably gave everyone a lot to think about today. I put a meeting link in the chat for anyone to book with us if you have any additional questions or want to discuss your own specific CDFI initiative. So no matter where you are in the journey, please feel free to reach out if there's anything that we can do to assist. And thank you so much for your time. Appreciate you taking the time to join us.
Yeah. Thanks, Phyllis. Thanks, everyone. Bye.
All right. Thank you.